there's outflows of $4.7 billion, and you dropped the net new money target for wealth management. Talk me through that.
Well, first of all, as I always said in the past, we are not focusing on net new money in terms of quantity, but quality, and the volatility each quarter of the net new money is shouldn't be overemphasized. So we still had a very solid net new money outcome for the year, particularly if you look at Asia, where we had a 9% growth, taking our client assets to 450 billion. Going forward, we are definitely dropping the net new money targets because I would describe the situation we are in terms of negative rates in euro and Swiss francs is driving us to a paradigm shift. Net new money will continue to be something that we look at, but at the end of the day, we are very focused on growing our business and growing our profitability. And net new money per se is not a good indicator of doing that. So actually, you can see how passive deposits sitting there, not really being deployed, is costing millions every year, and is also absorbing capital. So we're going to focus on quality of net new money and not on quantity going forward.
Can I just ask you then, in the past month, I'm just trying to get a sense of what's happened since the trade deal sort of took root in December. There was a shift in quoted markets. There was a shift in global sentiment. Have you seen that translate at a client level in activity in the past month, Sergio?
Yes, I think that if you look at if you compare not only year on year, but also the more recent history in respect of client activity and going into late November and December, last year we saw a much more constructive and active environment. This is the reason why, as I mentioned before, we had our best Q4 since 2010. This good momentum is coming into 2020. I think that if you also look at clients do expect, and we do expect what the IMF also reported yesterday, a further drop in expected GDP growth globally is somehow embedded in the market. The normalization of Brexit, the normalization of the trade tensions between the US and China is giving a little bit of more comfort to investors, and there is a need for a lot of this cash to be deployed. So there is a much more constructive tone, and the seasonality factor should not be forgotten. So I think that's, in that sense, we have a much more constructive view on Q1, but still, the visibility and the volatility and the uncertainty remains there.